Good afternoon, good morning, good evening, whatever time you're watching this. I just realized that the last video that I uploaded did not have any audio, which sucks. But yeah, we're gonna have to do this again and explain the same exact things. So, pretty much in the last video, the main topic was making sure that your higher time frame aligns with your lower time frame, right? This was the main topic, and I was explaining to you guys how you guys can get this and how to get areas of interest that you can look for entries and for take profits, and just have a better understanding of overall how the markets work and how the markets move. So let's get rid of this real quick. So as many of you guys do know, the foundation of my trading is the volume profile, right? Volume profile is a really good tool because it shows us where business was conducted, it shows us where business was not conducted, and it shows us where areas that there could be possible defense at. Um, so this is how it looks like. A lot of you guys do know I talk about this a lot, but let's do this. All right. So on the left hand side, we have a volume profile, right? So pretty much a volume profile, for those of you guys who don't understand it, you guys can literally look it up. It's pretty simple. It's standard deviation, and it just shows us where 68% or 68 to 70% of the volume was transacted, right? So, uh, right? So it shows us 68 to 70% where volume is transacted, depending on what settings you have. I use 68. Um, so yeah, so this is pretty much what it is. So volume is a transaction, right? For every buyer, there's a seller. For every seller, there's a buyer, right? So let's say you own a gas station. Let's say an Apple store. Actually, this is the example I always use. But let's say you owned an Apple store and you were selling apples for $1, right? And you realize that these apples sold extremely quick within the first 30 seconds of your store opening. So what does that tell you? That tells you that you have leverage, right? So what does that do, right? If you realize that your apples are selling out extremely quick, what can you do? You can raise your prices to $3. So let's say you raise your price to $3, right? Next thing you know, next day your store opens up again, and let's say you didn't sell any apples. Everyone that walked into the front door was like, "Oh my God, these apples are way too expensive," right? Way too expensive. So what happens? Price comes back down to $2. And why is it at $2? Because we know that the median between $1 and $3 is 2. And on top of that, this would be considered the fair value between the buyer and the seller, right? So this would be the party where the buyer is happy and the seller is happy. The buyer notices that this is a good price. It deems this as a fair price to buy at, and the seller sees this as a fair price to sell at, where they can make the most amount of their money while not skewing their the volume that comes into the market, right? So that's one thing. So obviously, let's do this actually. So obviously, if we were to put this on, a chart, this is what it would look like. At $1, price would skyrocket, right? We would come to $3, and then we would sell off from $3 because it's too expensive, right? Institutions, if this is an actual chart, would find this too expensive. So what would happen? Price would consolidate at $2. And the reason why it's consolidating at $2 is because this is where the most volume is being transacted between the buyer and the seller. The market likes this place. The market wants to gravitate towards this place because this is where the price wants to do business at, right? So on the volume profile, what the $2 would look like is it would look like right here. And the reason why it looks so big is because this is where the most volume was transacted, right? So then we have these, you know, inefficiencies in between price, where it shows us where price doesn't want to be traded at, which I'll go into in a second. But yeah, so $2 shows us this big spike in volume, and that's the reason. And the reason why is because there was a lot of transactions here at $2, because this is where the buyer and seller find this price deemed fair value. Now that we got that out of the way, so let's say this volume profile here. Oh wait, also I didn't go over one more thing. So look at this volume profile, right? And you're probably asking, all right, how do you know when it's overextended? How do you know when price is overpriced? Well, we have these things called a value area high, value area low. Sorry, this is a L. Just this is a L. So just look at this as an L. So you have a value area low, value area high. So the value area high is overpriced. Value area low is considered cheap, right? Okay. So that's one, right? Now let me know the basics. If you guys want to learn more, I have other videos, or you can just look it up on Google and um, do your research. I have a ton of videos on this. It's just the basics. All right, so let's say this chart over here. This is our monthly profile, right? So I used to do weekly profiles, but I realized that the monthly profile gives you a lot more information on what to expect and where the market is at. So shout out to Jaren for this, but he recently just, gave me a saying that, helped me and a bunch of my mentees. It's called COC, right? What is COC? COC is context, location, and confirmation, right? You guys get it. So context, location, confirmation. All right. Now that we have that COC, this is the framework that we're going to use to be getting and looking for the trades that we want to take, the setups that we want to take. We need context, we need location, and we need confirmation. So let's say this was our monthly profile, right? And on the monthly profile, we were doing transactions here a little bit at the value area low. Then we traded up, came down, traded back up into this high volume node, doing transactions here. Then we were here for a little bit at the value area high, right? What does the value area high mean? Overpriced. The value area low is underpriced. So this is what it would look like, right? So let's say this was the monthly profile, and in the monthly profile, we see that we traded up, we traded down, and let's say this is an area that we have rejected off of previously multiple times on the monthly profile at least, right? So when you're looking at this, you're supposed to be looking at the the frame of the market. Where have we rejected off of from multiple times? Uh, where do we deliver to? And this is gonna help us simplify that. So if I go here on the my chart over here, this is the uh, 30-minute chart that I have. My profile should be loading in a little bit, but I do have a custom profile, so I have it from the month of today is what, December 6th, so I have it from the month of November and all the way up to December 6th. So what that does is it gives me the monthly profile, and it also gives me the updated profile coming into the month. As you guys can see down here, it's loading. So before it loads up, the way I have it on the higher time frame is I have it so it tells me where business wants to be conducted. Where does business want to be conducted? At the high volume nodes. So as you guys can see here, we have a high volume node here. We have a high volume node here. And what is a high volume node? A high volume node is these points in price. So right here, right here, right here. And you notice that price does a lot of transactions. We consolidate there a lot. We consolidate here, we consolidate here, and here. And we also have low volume nodes. So low volume nodes look like this. So there's a low volume node here, There's also a low volume node here. So you could look at it like a little triangle. So this would be the low volume node. Everything within this would be a low volume node, right? Same thing with this. Same thing with this. So you can mark it out with a rectangle. But on my higher time frame, I have it so it's charted where the most volume is being transacted. And if, as you can see, this whole week we've been ranging and we've been balanced, right? So the market moves in, this is the way the market moves, right? We're balanced, then we're unbalanced, then we find balance again, then we're unbalanced, then we find balance again, right? And these balance areas is where a lot of volume is being transacted. So what you would notice is that you would notice that these areas would have a lot of high volume at them, right? So if I go here to my profile, the areas that I have marked out are high volume. So what do we notice about this week? We notice that we are trading within an area that where there's a ton of volume at, right? As you can see here, we traded up into this area multiple times, consolidated here a lot. What does that what does that tell us? This is an area where buyers and sellers agree. So how do you play off of this, right? Pretty much you just want to play off of this by looking at the extremes, right? And where are the extremes? Above the high volume node and below, right? Where the volume drops off a lot, and where the volume drops off a lot here at the highs as well, right? And the reason why is because if we were to have a profile, right, everything would consolidate in between, come up, sell off, consolidate in between, sell off, come back up. This is literally what it would do. And this is what you call a balanced range, right? The reason why it's called balanced is because we're just trading up within the same area, but we're just selling off at the extreme. So you want to look for your entries at the unbalanced areas, right? At the extremes. And the extremes would be here. This would be considered a value area high. This would be considered a value area low. So the more you start trading the profile, the more you're going to be able to notice the conditions that the markets are in, right? Especially in certain months, right? You're gonna notice that there's not as many big moves, and you're gonna be able to, perform in ways by identifying these conditions. So if we see here, like every time we sell off, we just push up right away, consolidate, then we sell off a little bit again. We just keep pushing up right away and selling off at the highs, right? So like right when I saw this on this day, I thought we were gonna sell off immediately. And this is why it's so important. The context location is so important because look, if you notice here, what happens? We sell off and we come back up immediately. And if you look on the right hand side, there's not a lot of volume here. This is considered a low volume node on the monthly profile. So I was expecting price to come down if we were to sell off and the sellers were being aggressive. I would expect us to come down back into this range down here where this volume was created because high volume nodes attract price. So if we're just rejecting off of the lows and we're rejecting off of the highs, what can we accept? What can we accept? We can expect a balanced price range. So that's that is how you're supposed to attack this week, after this day, after the third, right? You should be expecting price to be balanced, longing at the lows, longing at the highs. Sorry, longing at the lows, shorting at the highs, right? That's one. So that's the monthly profile. Now, what I do is I look at the monthly profile and then I come down to the lower time frame. So as you guys know, I have the monthly profile. I have the high volume nodes marked out where I can look to take profit at, and it could be with the median between this high volume node, um, or just areas where I would expect price to reject off of. And this is what I use for my entries. So looks kind of confusing, but pretty much this is a session volume profile. So I want to highlight a trade that I took on the 4th that was extremely clean and it was super obvious. Um, and it was this one right here. So this is the 4th. So as you guys can see on the 4th, um, alright, I don't know if I mentioned this, but sorry, I'm gonna go back to what I was saying. But if you guys didn't know, I don't know if I mentioned this, but these small little pockets of volume that are the low volume nodes, which is right here, price comes back down and defends off of these areas. Right here, we have it. Price comes back down and defends. The buyers, whoever's in control, they defend this area. Pretty much they put limit orders. It's pretty much like a fair value gap. So pretty much they put limit orders here to defend this area. So if price was to come down, buyers would defend it, and price would come back up into it. And then we also have the point of control. Yeah, I didn't mention the point of control as well. It's just where the price is the most transactions were transacted in that area. So this is the point of control right here. As you can see, we're trading within the point of control. So yeah. So what I do is I look at the higher time frame, right, and I notice, all right, what's on the higher time frame, right? You know that everything above 508 you reject off of, and there's a low volume node, so there's a area where buyers are defending, right? So this is an area where buyers are defending. So obviously an area where I'll look to get in at is at this low, which would be at 429. Why? Because there's a lot of we came down here once, we rejected off of it immediately. And two, there's a pocket of volume here that, buyers are looking to defend to get in to push price even further, right? Number two, this is where the most volume is transacted. So if price was to come down, this would be a good area to look to take profit at. All right, so that's number one. That's number two actually. So number three, if we were at these highs, I could be looking to short to the point of control, which is here, and that would be a pretty good trade in itself as well. So notice how I'm not playing. I'm not like, all right, I'm looking for longs. I'm playing both sides, right? I have two scenarios in my head. You should never be stuck to your bias. You should always be able to flip quick and play both sides. Because if you marry your bias, you're gonna wait for a setup all day. That's not gonna happen. So um, so as you can see here on the 4th, this is the 4th. So we're gonna look at the previous day. So the session volume profile, I like it because it shows us where volume was transacted from the previous day, and it shows us where these low pockets of volume are at. So the ones that caught my eye were I had this one and I also had this one, right? I like these two pockets a lot, and pretty much the reason why I like these two is because it's at a value area low. So the shaded part below this is a value area low, and we have the point of control above right here. So this, in my eyes, this was pretty good. I like this a lot, and this is what you should be doing. So if we go here, we see that here below 508 we have this low pocket of volume, which is right here, the one that I just showed you guys. We have this low pocket of volume. So remember what I told you guys, I liked 508 a lot. So everything below 508, as you guys can see, because this is where the volume starts to drop off, everything below that I could look for longs. So this isn't something you go in for and you look for blindly. There has to be certain confirmation when you're looking to take a trade, and you're about to see right now why I took this trade and what what was the confirmation for me to take this trade. So we had the low volume node 1, we have the volume drop off, and we have fair value within this high volume node. We see that price has rejected this low volume node multiple times. Alright, so what is that? That's the context. And what's the location? Previous day value area low. You know that this is an area where price is deemed very cheap, considered from the previous day, and even this whole week, right? We've been ranging within this whole week. So how do you grab an entry off of that, and what do you look for? All right, so we come to this day, and what do we notice? All right, so this is the 4th, as you guys can see, and we see that here we rejected off of it again. All right, came back up, traded up into the value area high, sold back off. We also did trade up somewhat near the point of control, and then we sold back off. Same thing here. came down, rejected off of this at 11:10. Could have looked along here, um, and take profits at the internal high, and then we came back down here. So at 14, which is 2 p.m., I had another alert. Alert got hit again, and I came back to my charts and I was looking to see what happened on the delta. Uh, so we look all the way over here. The reason why I like this trade a lot was because of this, and you're gonna see why. So we had a ton of imbalances down here, right? We had a ton of imbalances down here. That price came close to, we didn't fill it or tap into it, but we had this huge imbalance that we've left from the third, and it just matched, it just lined up with everything that I wanted to see. This is the low volume node. This is the low volume node. This is the area where volume starts to drop off at on the 30-minute time frame. This is also the low volume node and value area low of the previous day. So this is a level that we have, and this is also an area where we have an imbalance on the profile. So this was super clean. And on top of that, what happens? If we look at the volume, there's a ton of volume coming into the market, and it's primarily bullish volume. So what do we look at, right? There was 6,000 delta, 625 delta that came in negative, and they pushed the market down. And then we have a ton of volume. So this is the biggest volume that we've had out of the whole entire um, last hour. So what does this tell me? That there's something that's interesting that's happening in this area. We traded up into an imbalance. We're at a value area low. We're at a low volume on the 30-minute time frame, and previous day. So what is that? Context location. This is the location that we're looking at, right? And confirmation would be this, right? A ton of delta coming, a ton of volume coming in, right? Green volume. Obviously, there's a passive buyer, uh, you know, not allowing from price to come down. I'm pretty sure this was also um, there was a ton of negative delta coming in, and then the delta flipped positive. So you could have entered off of the close, right? Take your entry here, have your stop at the low or below the imbalance. You could also do that. That's something that I would prefer. And then you could have had your take profit here at this imbalance or here at this imbalance, or you could have just looked at the higher time frame, um, 30-minute, and just look to take profit at the median of this high volume node, right? So that's the reason why I liked this trade a lot. Or you could take it to the value area high. All depends on how you want to manage your entries and exits. So this overall was a super clean day, right? And this is why I tell you guys always um, wait for the confirmation, depending on the market conditions, right? If obviously if it's a condition where price is super clean, you could use the 55 mechanic model, which is a sweep for a kill zone. Tap into the 55 model, target TDO or session high or low, right? That's the mechanical model, and then we also have this right here, which is you look for where price is, the location of price. You look for the context of the market, and then you look for the confirmation, and this was the confirmation, right? So everything here was super clean, and yeah. So let's say I'm gonna do an example right now. Let's say if we were looking for something next week on Monday. Let's do this. Let me flip this to the left hand side so you guys can see this a lot better. 35. Alright, so let's get rid of this. Alright, so right here, we have Right here we have the valley area. This is an area where price rejected off from multiple times, going 30-minute time frame. Um, and now we're finding new values. So we have this new high volume node. So what I can expect is for price to come underneath. There's going to be an area where price defends off of a lot. We resisted off of this area multiple times. So now that we traded up above it, it could be used as support. So this is a new volume node that we're using that's conducting volume. So we're doing business here now, and we're rejecting at the highs, right? So it can be kind of tricky, and this is like market conditions that I kind of try to stay away from because on the monthly profile, obviously, we're trading up into the value area high, so a lot of things can happen here. But other than that, I could be looking to along the bottom of this and looking to get in at the highs of this, especially since we're at the value area high. And off of this profile, we have uh, I like this low volume node here. We rejected off of it pretty good. Um, and then we have this one right here as well, multiple times. I like this one a lot more than this one. And I like this one as well. So a quick rule of thumb, just so you guys can understand, this is not an area where you're supposed to be entering off automatically, oh, we should up into it or I short it. You're supposed to be looking for the confirmation, right? So that's one. Yeah, so I do like these areas a lot, and then we also have this right here as well. The edge of this profile and the edge of this high volume node looks pretty good as well. So yeah. So um yeah, I hope you guys enjoyed the video, and if you guys have any other questions, just shoot me a DM. Had to remake the video because last one uh didn't have any audio. So yeah, if you guys have any questions, feel free to shoot me a DM. And yeah, I hope you guys enjoyed the video.